Hi, this is Westpac London's not quite end of day report for Friday, September the 23rd. Was there a bounce after Thursday's rout on equity markets? Yes, there was a modest bounce, but it didn't last. I'll go into the numbers in a minute, but I can offer some reasons why markets found it difficult to sustain their early gains today. Firstly, the G20 came out with a statement saying that they were going to support the banking system, support financial markets, but they didn't come up with any specifics, which, in a sense, is saying making platitudes, but not actually putting any substance behind them. And I think the stock market, the markets generally saw through that pretty quickly. Greece, not in the news so much yesterday, is back in the news today. We had the Dutch Central Bank President, who's also on the Council of the European Central Bank, of course, say that he no longer excluded Greek default from the range of possible developments going forward. Greece itself denied, the Greece Finance Ministry denied, that one of the scenarios they were working on was a orderly debt restructure involving a 50% haircut for creditors. Now, the fact that they've denied that almost rings alarm bells that that's actually happening, or that is actually being discussed. At least that's the way I think markets have interpreted it. We also had the French regulator say that he thought 15 or 20 European banks needed to be recapitalised. He was actually asked, were any of them French? And he said, not at this stage. So that also rang a few alarm bells. He didn't deny outright that French banks would ever need recapitalisation. He just said that they wouldn't need it yet. Well, they might need it when Greece defaults. So the investors putting all these scenarios together, these little stories together, came up with a picture that the G20 is saying they're going to help, but it doesn't come up with any detail. Greece is not saying it's not going to default, but maybe it is. And if it does, then the French banks could in fact be in trouble. So that's the sort of thinking that's been going around today. No economic data of note to speak of in the US, Europe, UK. So really I can just run through the numbers. Now it's 2:45 London time. A bit early, I know, but US markets have been trading for 15 minutes. I've got to warn you that the European markets have been in sort of positive negative territory. It's like 7 times today. They're currently trading down. So they're up around 1% or more earlier on in the session. But now we've got the FTSE in London down 0.75%. The mining stocks again hit hard by further losses in commodity markets, which I'll talk about in a sec. The French market's down 1.6% and the German market's down 1.8%. Just in the early stages of trading, but the Dow's down about 1/3% at 10,694. On commodity markets, the losses are actually starker. I mean, you look at all the metals and they're way down. Silver down 10.5% today, on top of very steep losses yesterday. Nickel down 7.5%, aluminium down 4%, copper down 3%. Copper's down from something like 450 cents a pound at the beginning of August to something like 330 cents a pound. You can work out the percentage drop, 330 cents a pound now. That's basically commodity markets are pricing in this increased probability of a global recession or of a major Western economy recession, with China slowing as well on top of that. And they've had to rethink what's fair value for commodities and equities. Oil down 1.3%. That's $79 a barrel at the moment. It's the first time I've seen it below 80 for quite some time. Gold is actually below $1,700 an ounce as well. Gold fell 3% today. It's at $1,690 an ounce. The Aussie dollar actually hasn't moved that much. It's been up and down a bit today, but put it this way. 2 days ago, it was at 103, that's on Wednesday, against the US dollar. It's now at 97 cents against the US dollar. So in 2 days, we've seen a 6-cent fall in the Aussie, reflecting the safe haven status of the US dollar in this environment where there are concerns about the global growth story really slowing sharply. That hits commodity currencies like the Aussie and somewhat perversely actually benefits the US dollar, even though it's the US economy that's slowing, because of those safe haven flows, particularly into treasuries. And look, that's about it. I'm going to leave it there, other than to say that nothing really has changed today. It's the same concerns about the global growth story, with added piquancy added to markets today by the renewed or concerns about the potential for a Greek default. And if Greece goes, excuse me, my voice is going as well. If Greece goes, so too potentially would Ireland and Portugal, and that is something that markets are increasingly worried about. Okay, that's it for this week. We'll be back another week next week. Bye bye.